I don't think we're going to have an 80% drawdown from this spot price right now, because that would imply we go back to 20K. I think Bitcoin's beyond that. But 80% drawdown from 800K? Probably. But I think this says more about its upside and how emotional a free market is than it does about a weakness or lack of maturity that Bitcoin could have such drawdowns.
In terms of like moving to a neutral reserve currency, do you think the likely scenario is gold first, then Bitcoin?
You know what's interesting is Bitcoin might not have the skeleton, the frame to support $200 trillion of wealth over the next like few years, whatever the number is, right? And so I would say, I think it's a tale as old as time. Both will go up. Bitcoin will go up a lot more. Bitcoin will severely outperform for the obvious reasons. It's harder, it's scarcer, it's better money with all monetary properties.
Bitcoin stands at a critical moment. After smashing through record highs this year, it now trades near 112,000 US dollars. The swings are violent. Billions of dollars liquidated in hours, but demand refuses to fade. Institutions, corporations, and even governments are stepping in, transforming Bitcoin from an outsider's bet into a central force in global finance. Spot ETFs now hold more than 1 million coins, absorbing supply faster than miners can replace it. Companies like Strategy and Strive treat Bitcoin as a treasury asset, and in Washington, lawmakers are debating a strategic Bitcoin reserve, a sign that the US government itself may one day treat Bitcoin alongside gold. Globally, de-dollarization, swelling debt, and persistent inflation are pushing nations from China to Brazil to ask the same question: is Bitcoin the neutral reserve of the future? But as this wave of adoption accelerates, Jack Mallers warns that it comes with a hidden cost. Wall Street's deepening grip on Bitcoin, from ETFs to custodial platforms, risks turning a tool of financial freedom into another instrument of control. He draws a parallel to 1933, when the US government seized privately held gold. But the difference now is profound. Bitcoin can't be locked away in vaults or nationalized by decree. 12 words held in memory can move anywhere on Earth, beyond banks, borders, and capital controls. Mallers argues that this power, self-custody, is Bitcoin's last line of defense. It's what prevents capture, even as institutions flood in. And in my opinion, the stakes are rising. With US debt at record highs, inflation lingering, and confidence in fiat systems eroding, more nations are searching for neutral ground. Some, like China and Russia, are mining and accumulating Bitcoin rather than attacking it, proving that ownership has become more strategic than opposition. This is the crossroads Mallers describes, a world where governments and corporations collide with a monetary network designed to resist both. The question now isn't whether Bitcoin will be adopted, it's whether it can remain free. Also guys, if you like our cryptocurrency content, please remember to like and subscribe to stay up to date. Now, let's hear Jack's thoughts.
The big risk is always these like 80% drawdowns, which we've had every cycle so far.
Yeah.
Do you think that might be changing? In terms of like the Bitcoin cycles?
I don't personally, but I don't think of that as a function. You know, people think Bitcoin's going to mature, so therefore we're done with these cycles. And I think actually Bitcoin is so appealing and solves such a big problem, and it's such a free market that human nature is to get exuberant.
Yeah.
And this thing might tap 1 million before you think it ever could. And then of course it's going to go back down to 200, 300,000 or whatever. I'm making up math. Those aren't real predictions, but I think the drawdowns are actually a function of how well Bitcoin works and how free of a market is because it's going up so high. I don't think we're going to have an 80% drawdown from this spot price right now, because that would imply we go back to 20K. I think Bitcoin's beyond that. But 80% drawdown from 800K? Probably. But I think this says more about its upside and how emotional a free market is than it does about a weakness or lack of maturity that Bitcoin could have such drawdowns. Does that make sense?
Yeah, that makes sense. This whole conversation has basically been around the financialization of Bitcoin. Do you have any concerns about capture, as in whether that's like Wall Street capture, which then may lead to like state capture of Bitcoin? And I guess the like examples historically of that would be Executive Order 6102, and maybe the Russian treasuries as another example. Like if fewer and fewer people are like holding the keys to their Bitcoin because they're parking that in ETFs or like MicroStrategies or 21s. Like, what percentage chance do you think that in 10 years the US government knocks on Saylor's door and says, my coins now?
I don't know, as close to zero as there's like a realistic number. So there's no such thing as zero, but low. A few things, because I'm asked this question all the time now as co-founder CEO 21. It's like, are you capturing Bitcoin?
Yeah.
The funniest thing is I could own 1 million Bitcoin at 21. I have no greater influence on the protocol.
Yeah.
And so that's one of Satoshi's innovations is it's not proof of stake. The US dollar is proof of stake. Ethereum is proof of stake. Bitcoin's not. So it doesn't matter how much you own. You cannot, lessen or enhance anyone's influence over the protocol. So
just to play devil's advocate on that for a second.
Yeah.
I think one of the interesting conversations that may happen is around like quantum. Like, I'm not a quantum scientist, so I don't know if this stuff's real, but let's just, for the sake of this argument, assume it is real. Say we get 5-10 years out and there's loads of addresses that are at risk. There's going to be a conversation of what you do with those coins. Even if you assume they're lost or someone's died with the coins, whatever it might be, do we freeze those or do we let them be stolen, essentially? It's like, do we break the property rights of those Bitcoin holders or do we let a bad actor break the property rights of those Bitcoin holders?
I think the free market's going to end up solving that.
But the question, I guess, is while you don't have any more influence over the protocol, there is big like economic weight behind the arguments that like a Saylor makes in that conversation. And
why?
Because he is so followed, he's so influential, like, and he wants to die with his keys. He wants to like hold those and give them back to the Bitcoin network or whatever he says. Do you not think that someone with so much economic weight, influence, power can change that conversation in a way that maybe is not natural?
No. But I mean, I have lived experience with the block size wars. Like Coinbase and Bitmain, they had that same weight. If anything, they had more weight than Saylor does now.
Because they had all the mining machines.
They had all the machines. Yeah. They had they didn't have just as much Bitcoin, like say they didn't have 500,000 coins, but like Coinbase might have at the time in the form of customer deposits. Bitmain probably had like the biggest Bitcoin holdings at the time. The aggregate of like the New York agreement, like they were far more powerful in relative terms than Saylor is now, far more. And we've lived through that. And so no, with all due respect to Saylor, I don't give a fuck what he wants or thinks. If I disagree with it, like I run my own economic node and I have my say and I will vote with what consensus rules I run. And I would assume Michael to say the same to me.
Yep.
So no, I actually don't believe that. And I think the further point is that Bitcoin incentivizes everyone to act in its best interest. Like the famed 51% attack example is like, we used to all sit and be like, oh my goodness, what if nation states understand Bitcoin, start mining it because they have access to abundant energy and resources? Like a nation state, if anyone, is going to be the best miners because there's just energy everywhere in a country. Like what happens then? Then they're going to 51% attack Bitcoin. Well, they're all mining now. China's mining, Russia is mining. They're not attacking, they're stacking sats because guess what? Attacking Bitcoin to double spend like some random transaction of some dude buying pizza on Bitcoin Pizza Day is far less lucrative than just like owning a bunch of Bitcoin.
Yeah, it's Bitcoin Pizza Day today.
Yeah, exactly. So like China and Russia could probably like try and attack Bitcoin in reverse, like Joe Schmo's transaction, deposit to strike, and then, or they could just use all their energy to like have a bunch of Bitcoin as we move towards like neutral reserve status because Trump is kicking them out of the US financial markets. So point in saying that is like Saylor owns a lot of Bitcoin. He's probably incentivized to like do what's best for Bitcoin unless he wants to be poor. So like, so it's like, that's always what people forget is I think the free market will figure that out. Like my assumption is if we have to hard fork to solve the quantum stuff, then we will. And then the old compromised coins will be worth zero because the free market won't value them and all the exchange, it'll be like BTC old. And like you could buy BTC old if you want, but quantum now means they're effectively worthless and they're artifacts and maybe some ordinal scammers will try and value them as a tradable artifact to hang on the wall. but they're worthless and the free market will solve of that. And if Saylor wants to perpetuate BTC old, then his stack will just be worth zero and he'll pay for that. And I assume he's smart and he'll act in the best interest of himself, which is in the best interest of Bitcoin, and he'll do what's in the best interest of the network. Like that's what always happens, right? So I don't know. I don't feel, the more people buy Bitcoin, the more they're incented for Bitcoin to work. And there is no, you cannot flip a switch and co-opt it because you cannot garner any more or less influence. The only way you can co-opt it is if you can convince the majority of the network to be on your side. So the majority of the people would have to want the worst for Bitcoin for something negative to happen.
Bitcoin sits at a critical juncture. After hitting record highs this year, it trades near $112,000. Volatile, yes, but with relentless demand from ETFs, corporations, and even governments debating reserves. That raises the real question: who controls Bitcoin? Wall Street wants it folded into the old system through custodians and funds, but as Jack Mallers stresses, the power isn't in vaults or banks, it's in self-custody. 12 words can move wealth across borders, beyond the reach of executive orders or capital controls. Unlike gold in 1933, Bitcoin can't be seized by force. Geopolitics reinforces the point. Nations once seen as threats, China, Russia, are no longer plotting to attack the network. They're mining and accumulating instead, realizing that owning Bitcoin is more lucrative than trying to break it. In an era of sanctions, de-dollarization, and mounting US debt, that shift carries global weight. Mallers makes clear that volatility isn't weakness, it's the mark of a free market asset. Cycles clear leverage, strengthen conviction, and prepare Bitcoin for the day when its harder, scarcer design allows it to outpace gold and move toward true reserve status. The stakes are simple. Does Bitcoin remain neutral and uncapturable, or is it absorbed by the powers it was built to replace? Mallers' vision points to one answer. When tested, the free market wins.
And what about on the self-custody side, like the ability to self-custody freely? You don't think there's a risk of capture there either?
No, I think similarly, I think it's such a difficult thing to enforce. Like, by the way, the executive order on gold it was like, we don't want you to be self-custodying gold. If, you're going to be in really, really big trouble if I find out you are, so you might as well deposit it to us. But it wasn't like they couldn't enforce that. They'd go to everyone's house and hands up, we're going to spend 12 hours looking for the gold in this house that may or may not be here. And there's a 10% chance we'll even find it. That didn't happen. And so the odds that they show up to my house and say we're going to look for 12 words that might be in your brain, 0% chance. So, could the US make it really frowned upon and potentially enforce some violence as to the fact that I own private keys? Yeah. But again, is that in their interest? Probably not. I'd be shocked if it was. What I think the United States should do is what they did for the internet, which is as long as you don't steal from people and as long as you don't harm people, there are no rules. Build what you want. And that's why Silicon Valley's here.
Yeah.
I think that's where we're going towards is I don't think you should get money transmitter licenses. Anyone should be able to build an exchange. Anyone should be able to build on Bitcoin. Don't steal from people, don't hurt from people. That looks to be where we're going, because I think what the United States is realizing is one of the greatest assets are the entrepreneurs and the technology that we have here. It'd be a really bad idea to force all the private keys. By the way, how connected the world is, access to travel, the internet, another executive order. Back in the day, think about where we were in the global scheme of things when the gold executive order happened. Today, the US executive ordered me, I'm going to go live in Costa Rica with Dorsey. I'm not goodbye.
Yeah.
I have every access and connectivity to just leave. I'm going to El Salvador. So I also don't think it's as real of a threat anymore. You have nomads and people traveling and living all over the place. So if you don't respect my property rights for the most pristine asset to protect my labor, then I won't argue with you. I'll just leave.
I think you're right. And it's the same thing we see when any country tries to implement a wealth tax. It's great, but all the rich people just leave.
Right.
And obviously gold has been just like immense over the last 6 months or so. In terms of like moving to a neutral reserve currency, do you think the likely scenario is gold first, then Bitcoin?
You know what's interesting is Bitcoin might not have the skeleton, the frame to support $200 trillion of wealth over the next like few years, whatever the number is, right? And so I would say both. I think it's a tale as old as time. Both will go up. Bitcoin will go up a lot more. Bitcoin will severely outperform for the obvious reasons. It's harder, it's scarcer, it's better money with all monetary properties. But, our central banks in China, is China going to take their trade surplus and plow it into Bitcoin? I mean, they're going to send the price to, it's a much more difficult asset. I think people don't necessarily appreciate that, think of Bitcoin like a skeletal muscular frame. Like, how strong is it? How much weight can you put on its back right now? Can it take China's trade surplus? On an annual basis, China's $1 trillion, Bitcoin's market cap's $2 trillion.
Yeah.
And so I think what you'll see is Bitcoin will grind up and continue to outperform gold. And at some inevitable point, it'll be big enough. But I think for the time being, you'll probably see both do well, because the amount of capital and the size and demand of a new monetary transition, Bitcoin's just not big enough yet.
This conversation makes one truth clear. Bitcoin's fate is not in the hands of Wall Street custodians or government decrees, but in the resilience of its design and the conviction of its users. Jack Mallers underscores that while ETFs and corporate treasuries fuel adoption, real security remains in self-custody, 12 words that no state can confiscate. Unlike gold in 1933, Bitcoin is borderless, memory-based, and resistant to executive orders. That strength is now visible on the world stage. China and Russia, once imagined as existential threats, are mining and accumulating instead, recognizing that ownership is more profitable than attack. In Washington, lawmakers openly debate a strategic Bitcoin reserve, signaling that Bitcoin has moved from the edges of finance to the center of national strategy. Volatility is part of this journey. Sharp drawdowns do not mark failure. They clear leverage, reset markets, and prepare Bitcoin for the next leg higher. Against a backdrop of soaring US debt, stubborn inflation, and declining trust in fiat currencies, the argument for a neutral, uncapturable reserve asset has never been stronger. The message is unmistakable. When Bitcoin is tested, the free market wins. Thanks for watching, and if you enjoyed this video, please remember to like, subscribe, and share your thoughts in the comments section below.